So our second speaker will be Feline Tan, who is an equity analyst with the research team at IFA Singapore, providing analysis and research coverage on both stocks and ETFs listed on the Singapore, Hong Kong, and US markets, particularly in the financial sectors. So apart from providing equity views through various media platforms, including 联合早报 and 96.3 FM, Feline is also an avid investor herself. So Feline has graduated with a Bachelor of Business with Honours, Banking and Finance from the Nanyang Technological University. Today, we are happy to have her here with us to share more about megatrends and sustainable investing. Feline, please.
All right, thanks Limta and thanks Colin. So good evening everyone, I'm Feline, I'm from the Stocks and ETF research team of iFast. So for my part, I'll be sharing a little bit more on sustainable investing. Okay, so sustainable investing has been around for a long time, but interest and awareness seems to have accelerated over the last couple of years. So it is a really broad investment approach that incorporates not only financial returns, but also social and environmental objectives. So basically, investors are not just looking at financial returns anymore. And many companies have noticed this change in investing approach and have started incorporating more sustainable investing approved activities in their business model. So for instance, many banks today are slowly pulling back their funding to the traditional oil and gas projects amid a wider push for sustainable investments. Our homegrown real estate company, CapitaLand, it has also been investing a lot in green buildings as they target to green its entire global portfolio by 2030. And of course, when you hear the term sustainable investing, the first thing that comes to mind would be ESG. And ESG refers to a broad range of environmental, social, and governance criteria on which companies are measured. So the way we interpret this is that ESG forms a framework for investors to conduct sustainable investing. And for our first criteria, it looks at the impact and consequences, as well as the company's effort to improve or reduce damage to the environment. And for social, it looks at the relationships with and fair treatment of stakeholders such as the employees, suppliers, clients, and communities. Yep, and finally, for governance, it refers to the implementation of fair corporate governance and proper internal control within the company. So the next question in mind would be, why are investors, be it institutions or individuals, why are they taking a sustainable approach to pursue their investment goals? So to answer this question, we have identified two driving forces of sustainable investing, which are number one, customer loyalty, and number two, the cost of facing regulatory trouble. So consumer loyalty. As mentioned earlier, investors now, they're not just looking at financial returns anymore. So people are more aware of the idea of sustainability and they are more likely to support the brands they believe in, especially those which provide high quality products or services that have values aligned with theirs. So if we like something, we support it through our money or word of mouth. But naturally, the opposite is also true. So consumers could also boycott the brands about companies if they do not agree with how the businesses are run. So in a recent survey, there was this market research firm, Nielsen. They discovered that a substantial 46% of global consumers are willing to forego a brand name in exchange for a more environmentally friendly product. So what this means is that companies will really need to start incorporating sustainability in their operations if they wish to remain relevant in today's context. So aside from consumer perception, regulatory issues can also be a massive and expensive nightmare for corporations. So they can directly affect firms' bottom line once fines are imposed and legal fees start to pile up. And similarly, as news about these regulatory troubles goes public, the bad press can also put the firm in a negative light, and there will be intangible costs like the loss of employee morale, brand damage, loss of shareholder confidence. All this will likely ensue, leading to further damages to the company's operations. So to sum it up, there are plenty school of thoughts when it comes to sustainable investing. But at the end of the day, there isn't a fixed way of doing sustainable investing. So there are investors who actively avoid investing in companies whose businesses are perceived to have negative effects on society. And this includes businesses across industries like alcohol, tobacco, fast food, gambling, weapons, fossil fuel, and etc. And on the other hand, there are also investors who take into account all aspects of ESG before deciding to make an investment in it, where they increase exposure to companies with positive ESG characteristics. So I believe from a retail investor point of view, like myself, impact and sustainable investing is important because at the end of the day, what is the point of investing if something that doesn't have a future? And ultimately, to us, the bottom line to sustainable investing is actually really about identifying companies, identifying themes that have long-term and sustainable growth. So in light of this competition, we would like to share two themes that we believe resonates well with sustainable investing. So as mentioned, instead of trying to fit everything into the ESG framework, our main objective is really to identify themes that have long-term and sustainable growth. So the two ideas that we'll be discussing for the next 10 minutes or so will be on China environmental protection as well as China technology. So first of all, with governments around the globe pumping billions of dollars into the environmental protection sector, it might be a good time for investors to jump in right now. So in our world today, sustainability has never been emphasized more as our Earth fights against all sorts of environmental problems. And just to name a few, we are facing climate change, water pollution, increasing amount of waste, resource scarcity, and etc. And there is one particular country that is notorious for its environmental issue, and it's none other than China. So China has experienced outstanding economic growth in recent years, recent decades, especially by Colin, but that is also accompanied by mounting environmental problems. And one very pressing concern China is facing is its problem on water scarcity. So in China, over 85% of its groundwater is classified as grade 4, grade 5, which is bad and very bad. And over the last decade, water consumption in China has also grown steadily, but its water supply has remained flat. So given how China's urbanization rate is expected to hit 70% by 2035, you can imagine how this increased the long-term demand for clean water, which put further pressure on the country's already scarce water resources. And on top of that, China's rapid urbanization has also driven up the amount of wastewater discharged into the rivers each year. And if this is not dealt properly, this will further deteriorate the water quality in China. And clearly, something needs to be done to tackle this water scarcity issue. Another major environmental problem China is facing is their rapid increase in waste. So with about 1.4 billion people, China is the largest country by population. And coupled with economic growth and urbanization, it has also become the world's largest trash generator. And with e-commerce sales in China rapidly increasing, its online retail and related delivery services are expected to further contribute to the country's mountain of waste. So it is so bad that it is projected by 2030, China's volume of waste produced will be double of America's. And we know that poorly managed waste can cause harm to human health and the environment. And this highlights the pressing need to deal with the rapid increase of waste in China, whether people like it or not. And our third point for the alternative energy component, we know that the ultimate goal for most countries, including China, is for renewable energy to make up majority of the nation's energy sources. So in fact, in China's 14th five-year plan guidance, it set a target to be carbon neutral by 2060. And the latest plans outlined for energy also shows that the country could increase annual installations of solar power generation capacity, which is about double the country's current rate. And to be carbon neutral would be a good thing for electrical vehicles as well, given how they don't run on fossil fuels. So China has a proven track record of achieving ambitious long-term renewable energy goals within each of their five-year plan. So you can imagine the kind of changes we can expect from China in the next few decades. So overall, we see long-term and sustainable growth within the environmental protection space, given the need for China to clean up its environmental mess it's facing right now. So we believe this theme does fall under the umbrella of sustainable investing, which would be very much relevant for this competition. So the second theme we would like to share would be the Chinese technology industry. So consumption in China today has become increasingly digitalized, which means many forms of consumptions are now done online. Younger generations are more willing to pay for the convenience of on-demand services such as food delivery, online shopping, and etc. In China's online consumer services market grew from a 10% of the total market gross transaction value in 2013 to more than 25% today. And the rising number of internet users in China will continue to be the driving force of China's internet companies. So we also see two distinct groups that will drive the growth of the internet companies, namely the millennials and the rural population. So firstly, there are more than 350 million millennials in China, which makes up 25% of China's total population. So millennials, they are brought up in an era where they are constantly exposed to technology and have grown to become avid internet users. So they are responsible for more than half the total internet usage and contributed to two-thirds of the total consumption growth in 2018. And these millennials, they will either soon enter the workforce or are already at the early stages of their career. So this will vastly increase their spending power, acting as a major driving force for the Chinese tech sector. And next, we also have China's rural population of roughly 550 million people. So we also see that as another huge untapped market for the Chinese internet companies. So internet penetration in rural areas is only about 56% as of end of last year, but it remains well below the urban regions of about 76.5%. But as the government continue to push the big telecom players to speed up construction of internet infrastructure at the rural regions, we believe that the rural population will emerge as another wave of internet users, which will in turn present Chinese tech companies with immense growth opportunities. So needless to say, we see huge potential within the China tech space. So now we agree that the China tech space has great potential. We should assess whether this growth is sustainable or not. And from the sustainability point of view, we know that majority of the tech consumers are millennials. So these customers, they do not just seek products and services at competitive prices and high quality, but they also kind of expect high ESG values as well. So internet companies, they usually have limited use of physical infrastructure or facilities, and most do not have manufacturing operations. So overall, they produce comparatively low greenhouse gas emissions, pollutions or environmental waste, and they also have low land and water use, which kind of checks off the environmental criteria. And from a social perspective, technology enables a lot of things. So for instance, two Chinese giants, Alibaba and Tencent, they managed to address the issue on financial inclusion, where they helped to reach out to millions of people who were previously unbanked. So through their technology, they help these individuals to gain access to financial services, which enables them to step out of poverty and reduces the inequality in society. And besides, this also collectively help to develop the society, which will in turn drive economic growth. So similarly, technology also empowers the rural Chinese communities with education. So we know that education is important, but yet due to the limitations of physical classroom education, the Chinese rural population has historically been disadvantaged in education attainment. So large numbers of rural small schools suffer from the deficiency of qualified teachers. But with the fast development of technology and the increase in online resources, this form of technology is able to provide a powerful tool to bridge the gap between rural and urban students. And of course, leveraging on this kind of technology, schools are able to increase class materials and stimulate teaching innovations, which benefit students dramatically and eventually benefiting the economy and society. So here we have are the two themes that we like to share with regards to sustainable investing and mega trends today. And in general, we do believe that these two themes do fall under sustainable investing. But of course, one can always say that more can be done in terms of integrating ESG into their decision making process and their business models. But before we end this session, maybe let me circle back to what Colin has presented earlier on with regards to portfolio construction. So for the two themes that we have discussed earlier, we believe that they can be allocated under the tactical allocation portion. And to gain exposure to these two themes, our preferred choice would be, for example, the Queen Shares MSCI China Environmental Protection ETF. And for the China technology industry, our preferred exposure would be through the iShares Hang Seng Tech ETF. Okay, so when it comes to the selection of ETF, we usually follow our in-house ETF selection methodology, and shown on screen over here. So let me just use the Hang Seng Tech Index as an example. So first of all, we have identified this index as the most appropriate to gain exposure to the Chinese internet industry. So this is largely due to the individual holdings this index holds. And next, we just pull out all the ETFs that tracks this Hang Seng Tech Index. Then we look at the three quantitative factors of the ETF to kind of score them accordingly. So we look at the ETF's expense ratio. We look at its liquidity, which is as measured by the average volume, the average trading volume, as well as the average bid-ask spread. And finally, we also look at the ETF's tracking difference. So each factor is assigned a weightage based on their relative importance, and a score is given to them to each line item as shown over here. So it's like a relative score based on out of these five ETFs. Okay, so finally, each ETF is scored using the weighted factors, and we proceed to sum them up and rank them based on their scores. So for us, you can see that we care most about the expense ratio because it directly affects the investor's return. And based on the score, you can see that iShares Hang Seng Tech ETF emerged as the winner among its peers. So yeah, this is how we choose our ETFs over at iFast. And if you would like to know more about it, we have written an article on this selection methodology before. So you can just head over to our website to read more about it. And that's all I had to share you guys today. Once again, thank you so much for joining Colin and myself tonight. And let us know in the comment box if there are any questions you would like to ask. Thank you.
Let us wrap off with a brief closing. So NTU-IIC would like to thank our distinguished speakers, Colin and Feline, and the rest of the iFast team for your time to share with us this valuable and practical insights about portfolio management, mega trends, and sustainable investing. We also like to thank all participants for attending today's webinar and your participation. So with this, today's online webinar has officially come to an end, and thank you for everyone for your time.